Hello, in this presentation we will generate and analyze comparative financial statements within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are with the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We've completed entering data for the second month of operations into our problem here, and we're going to take a look at some financial statements here. Those basic financial statements typically being the balance sheet and the income statement. We're going to take a look at a little bit of an adjustment, look at some comparative financial statements for the 2 months that we've entered, including January and February of the year we're working in for our practice problem. We'll also take a look at another report, which will be the transaction detail by date. So if you're following along with this information, you can use that report. It's a great report to really kind of see if the information is in there as it should be. It gives us information as we go. That's great to analyze how things are going, what the actual input is happening through the system as the input is happening basically by date, no matter what the input is, as opposed to the financial statements, of course, which will group that information in accordance with the rules of the financial statements. So let's go to the balance sheet first. So we're going to go to the left side over here, looking at the reports, and the main reports will be our financial statement reports first off. That's going to start with the balance sheet. So we're going to select the balance sheet. Now, before we go through the dates and everything, note that what we're really saying is we entered data as of the end of February now. So when we think about a balance sheet, we're typically thinking of it as of a point in time. That's what a balance sheet is. And really, we only need one date in order to say what that balance sheet is. So if the one date would be as of February 28th, in our case, 2021. So let's start with that and say we're going to say that it's just one day, 02/28/21 to 02/28/21. Same day, the end of the month, the end of the month of February for the year we're working in, February 28th, 2021 to February 28th, 2021, and we're gonna run that report. So here is the report. Now, note it gives us all this data as of one day, because it's not trying to show us what's happening over time, it's telling us where we are at that point in time. So no matter what beginning date we have here, it will always show that same ending numbers. So we'll give us some evidence of that real quick and see where any kind of deviation might be from that. So as of this point in time, as of the end of this month 2, February 28th, 2021, we have cash or the checking account of $99,210. People owe us money, $10,449, and inventory, prepaid, insurance, short-term investments, some money that we haven't yet deposited into the bank account. We've got the fixed assets in terms of furniture and fixture, and that gives us our total fixed assets and total assets here. Note that if we were to report this in some other format, we might want to remove things like such as the zero here, and remove that account. We might want to, but it's great that QuickBooks has this because it allows us to drill down on that. So that's just some formatting things within QuickBooks as we take a look at these end of the year financial statements. Also, we have this undeposited funds. In essence, that's cash we haven't deposited. So on a balance sheet, we may, if we were going to adjust this and report it to someone, we may make that and adjust that to the checking account in order to have just one cash account. We may even call the checking account not a checking account, but cash and cash equivalents. So these are some slight deviations that we might have if we were to more formally put together the financial statements, possibly take these numbers and group them a little bit differently in order to report the financial statements. And if we scroll down at the bottom, we got the liabilities, we got the accounts payable, we got the credit card, we've got the State Board of Equalization. Again, another thing that's a payable, it shows exactly who we're paying to, but really this is a vendor. So if we were to adjust the financials and report this to someone, we might just call that something like sales tax payable, some type of payable such as that. Out of scope agency payable, again, it's a zero here, so we may not put anything there. We've got the payroll liability amount here, so that's how much is owed for the payroll liabilities, typically much of it being payroll taxes that we owe, that we've either taken from the employee and or our portion of the payroll taxes that we owe to the state. We've got the loan payable that we have here. This we're going to have to take a look at, probably adjust it a bit, because there's going to maybe be a short-term portion and a long-term portion of that loan payable. That gives us our total liabilities. And then we have the equity section. The equity section has the opening balance, which we removed. If there is an opening balance that looks kind of funny, we'd probably want to get rid of it, because that's really kind of like a plug number that QuickBooks uses in order to make things work when things don't work, when things are out of balance. And that we had that when we first started the business, because that's how QuickBooks allows us to enter those opening balance, and QuickBooks just makes it work with an adjusting entry. So we remove that, and that's 0 at this point. Note that if your numbers, if you've been following along with this and your numbers don't match exactly here, then of course we'll take a look at the transaction by detail report, and that's the one that you can really go and look at each transaction and try to say, okay, what is going on? Why is this not exactly the same? So then we got the owner investment. That's the money that the owner has put in to the company. We've got retained earnings. That's the accumulation of money over time that has not yet been given back out to the owners in terms of draws or dividends. And then we've got the net income. This is an unusual number here, net income on the balance sheet, not typically reported on a balance sheet because it's typically included in the net income. QuickBooks breaks it out, and I think the main reason is that they're trying to show how these are related. They're trying to say, hey, this net income is related to the profit and loss or income statement. Now, you might be saying, well, it's a good question to ask, well, what is that net income given the fact that it's only 1 day? We only reported this, if we scroll all the way back up, for 1 day. So how can we have net income for 1 day? And typically, QuickBooks will kind of pick the period of time, like a month's time period, and report income over the month's time period, even though we chose 1 day. And that's going to be one of the things that's unusual about the way the balance sheet is going to be reported here. And we have a similar issue with the owner's investment. These are really timing accounts that typically are broken out in timing statements, like the statement of owner's equity and the income statement. QuickBooks is trying to put them in there to the balance sheet to tie everything out, and to do that, they have to make some timing adjustments in what is typically a point-in-time statement, the balance sheet. Now, we know we're in balance, of course, because the total assets up here, where are those total assets? The total assets up here are equivalent, that's what the company owns in terms of measuring it in cash, are equivalent to the liabilities and equity, who the company owes those assets to, who has claim to those assets, a third party, and then the equity section, meaning the owners. So that's going to be the balance sheet. And again, if yours doesn't look exactly like this and you've been following along, we'll take a look at the transaction detail, and then you can go back here and take a look at this again. What we want to do now is make some adjustments to this. First, I want to just point out that if I change this date range to the first, 01/01/21, meaning the whole year to date, and then run that report, we have no change here in the cash accounts. Most of the accounts are all going to be the same because the balance sheet is as of a point in time. Now, the exception to that rule could be down here in this 643, which actually didn't change because QuickBooks, no matter what we put on that beginning date, is really kind of putting the year to date number, because we are a fiscal year company, meaning we have a year of January to December. So it kind of kept that 643 no matter what date range we're putting in, even though this is a timing account. So you might be asking, well, why do we want a date range here? Remember, there's a couple different reasons. One is that if we want to drill down on these numbers, if I want to see what happened in the checking account, and if I click on this, then QuickBooks can jump right to that date range that we had, rather than us having to go back up here and change the date range. That's really the major advantage when you're just looking at a normal balance sheet, of having two dates on the balance sheet. So typically it's not something normal, but it helps with this kind of process. If we go back to the report summary, so here is going to be our report summary. Now let's make some adjustments. Let's customize this a bit and see if we can do a comparison. I'd like to see last month compared to this month. To do that, we're going to scroll up and we're going to go to this customize section. So we will customize this report. And I'm going to change the dates back to, so we want to have it 02/28/21 to 02/28/21. So it's as of the end of the second month. So we're going to say this is the second month of operations that we are dealing with. Now you would think if we wanted a comparison of January and February, we would want to have January 1st through February. But what we're going to say instead is that we have the month of February, and then tell the system that you want to pick the prior month to it to compare to it. So let's see how that works. We're going to have all this is going to be the same up top. We're going to select this drop down if it's not selected already, which is rows and columns. And then we have the totals only selected, meaning it's going to take whatever date range we have right now and total it up as of the end date, as of the point in time of the financial statement. We're going to change this to months. And what that'll do is it's going to say whatever the range is, we want to break out the months of that range. So if we were to have, for example, January in this date range through February of 2028, there'd be 2 months involved, and QuickBooks would take the end of those 2 periods, meaning January 31st and February 28th, the end of the 2 months, and compare those two. Now we want something a little bit different. We want to compare the previous period. So we're going to select the previous period comparison. And what's that going to do is it's going to take, this is the month of February, it's ending in February, and we want to compare that to the prior period, which in this case is January. So by selecting this item, it's a little tricky because we're not really setting the date ranges here. We're saying, here's the end of the second month, and then we want you to compare it to, or compare it to the prior, in this case, month, told it by the months here and the fact that we have this checked off. So let's run that. We'll do this incrementally, and then we'll go back and we'll add the changes here. So we're going to run that, and we see that we have the current month. It says February 28th, 2021. This is the current month, which is the 99,210 for cash. And then it gives us the prior month. Now note this is the balance sheet as of a point in time. So this is where we stand as of the end of February. This is where we stood at the end of January. So we're going to add to this now. We'd like to see the difference between those two. What was the difference between where we stood in between January and February? And we'll have a percentage change. So those are the changes we're going to adjust now. So we will customize this report. We're going to scroll back down, and we'd like to see a change in terms of total dollars and a change in terms of percentages. And then we're going to say run that report and see what we have there. So here's what we have. If we pull out the calculator and see what happens, then we're going to say that really this is just taking the difference here. So that's going to be the 99,210.56 in the current minus the 94,436.17. That's the difference in dollar amount. Now that difference in dollar amount is great because it will give us our dollar amount difference, which is very useful. But we can't really compare that to other companies very easily as much as we could compare the percentage changes oftentimes. So the way to get the percentage change is to take the difference here and then divide it by the original amount. This is where we started, this is where we ended. So here's the change. We're going to divide that, I just divided that by the original amount, which is the 94,436.17. And that gives us, if we move the decimal 2 places over, 5.055%. That's how this percentage is being drawn. So we have the current period, the prior period, the change, and the percentage. I'll scroll through this slowly so you can just kind of see the comparison. And then we're going to export this report to Excel. And then we'll do the same type of analysis in the profit and loss report. Okay, so there's that. I'm going to scroll back up. We're going to scroll back up, and we are going to export this report to Excel. To do that, we're going to select this item here. We're going to export, and we're going to export to Excel right there. And here is our report. I'm just going to open that up. Here it is. I'm going to put that up here. So there is our report in a nice format for us. We can go ahead and save that. So I'm going to say File on the left side. We're going to Save As. Browse to where we want it. I'm going to put it in this Excel Docs number 8, and we could change the name. It's got the name of the company and then the balance sheet. I'm going to keep it as is. You might want to put actually the date and then call it a comparative balance sheet. I'm just going to keep it as is since it's the only report we have there now. And then we'll close this back out. And now let's run the same thing for the profit and loss. To do that, we're going to go to the reports on the left side over here. And we're going to go to the profit and loss report as we've seen in the past. We're going to change the date here to the month of February, which is going to be 02/01/21/202/2821. That's February 1st, 2021 to February 28th, 2021. And run that report. So here is what we have. Note that as we look at the profit and loss, the date range actually makes kind of more sense that we record it up here because we're really talking about the month ended in this point. And actually the name that QuickBooks uses up here is just February. It's really the month of February. So we have to, it's not just the end of February. So it does kind of say that it's February, meaning the whole range of February, not just February 28th. And so if we scroll down here, then we've got our information, which does make sense only from a standpoint of a range of time, meaning February 1st to February 28th, as opposed to the balance sheet, which only makes sense really as of a point in time, which is February 28th. In other words, the cash account is what it is as of the end of the month, whereas the revenue accounts here, these revenue accounts, are only what they are for a time range for the month beginning in February 1st to February 28th. These add up to the total revenue adds up to the $15,800. Cost of goods sold is what we had to expend in terms of guitars in order to generate the revenue. Now note that this number is only really relevant to, or it's best compared to, the sales that we had for product inventory right here, sales of product. And a lot of our money, of course, is service income in this example, which is the fees earned for the guitar lessons and the rental equipment. That gives us our gross profit. And then we've got our other expenses. Note that there's, of course, more expense categories typically in a company than there are income categories. However, we hope the income categories are larger in total. Here's our total expenses down here. Then that'll give us our net income from operations. And then we have our other type of things. These are things that are not normal to the business. So that's still income, but it's not up there with the other income. Because typically we think of interest income as something that we're not in business to do. We just happen to earn some interest income and it shouldn't be up with the other income. Now the interest expense probably could be down there as well, but we're just going to follow the format of the problem as it is shown here. So that's going to give us then our net other income and our net income for the month here. So this is going to be our total. Now we would like to see a similar comparison that we saw on the balance sheet, meaning we would like to compare the January and February side by side. So to do that, we're going to go back up. We're going to customize the report. Now we want to see January and February, but again, we're only going to show the month of February, and then we're going to tell the system, hey, I'd like to see the prior month as well. So we're going to scroll down here. We've got the totals here this time. I'm going to keep that here. And then we've got the paid prior period comparison, previous period. So we'd like to see the previous period here. And of course, we have the current month. So the previous period will be the prior month. And we're going to select that item. Now, if we just check that and then run it, we'll do this incrementally again. Then we see the comparison of the current month, February, to the prior month, which is January. Now that's great, but of course we also want to see the comparison in terms of dollars and percentage change. To do that, we're going to scroll back up, customize report. We'll scroll back down and we want to take the dollar change and the percentage change. Then we're going to go ahead and run the report. And there we have it. So now we've got the difference here, of course, in the rent, there's nothing in January and there was $4,005, difference $4,005. In February, we had 2,000 sales of product income versus the 2,467 gives us a negative change, decrease of 467. And then the fees earned 9,003 versus the 508 positive change here. Here's our totals for the sales. And here's our difference. Now this percentage again, if we calculate this percentage, we're going to say that the difference here is the 15,800 minus the 2,975.4, or 12,824.60. Now if we take that number and divide by the previous month where we started from, this divided by the 2975.4 gives us our change. We got to move the decimal over, so it's actually a 431% increase, which obviously is very large, and that would make sense because it's our first month of operation in January and the second month here. So there's a huge difference because of the first and second month of operations. If we take a look at our cost of goods sold, it's a more modest, normal looking type of change where we had the income, the first amount 1600 minus the 1950. That gives us the 350. If we divide that by the original number, divided by the 1950, we get the, if we move the decimal over two places, 17.9%. So that's going to be, the reason we have these percentages is that we can't really compare this dollar amount to other companies very easily that have a different scale. They might sell a lot more or a lot less than we do. But we can compare the percentage change more easily because that should change in relation to their scale, and therefore it could be a lot more telling number. That percentage could be very useful in that way. So we're going to go ahead and print this out. So again, I'm going to scroll through this one time so you can compare this out, and then we will go ahead and export this one as well to Excel. So we're going to scroll up top, we're going to select this drop down and just export to Excel. Here is our report. The format looks good, so we're just going to go ahead and save this as we did with the balance sheets. I'm going to move it up a little bit. We're going to just go to the File tab. We're going to save as, browse, locate where we want to put it on the computer. I'm going to put it in this Excel Docs folder. And once again, we probably should be changing the name. I'm going to keep the name just to be, it's what we've been doing before, but it's got the name of the company and then the profit and loss. You might want to put the date of the profit and loss there. You might not need the name of the company there as well. So I'm just going to go ahead and save that. And then we're going to go and close this back out. Now, if either of those reports didn't tie out and you've been working through this problem, the next report is the one you can really take a look at and see the activity and see exactly where we might have a problem. Now, if, of course, you had two systems, you can go through and you can click on these items and drill down on the activity. That's going to give us activity by account sorting type, so you can see which number we're off, and if we were side by side working on two systems, that would be a great way to go through this. We can see, is cash different? Well, what's different between the two cash accounts? But if we want to see all the transactions by transaction, no matter what account they are in throughout a certain period, in this case, the month of February, we can look at another report to do that. And so we're going to go to the reports. It's called a transaction list by date report. And it's actually down here. We could type it out, but it's actually right there. Transaction list by date. So we want to run the transaction list by date. Now, we already ran one for January, and so if your January numbers, if your beginning numbers are wrong, then of course the February numbers are going to have a problem as well. But we're just going to run this for February here. So we're going to say 02, so it's going to be 02/01/21 to 02/28/21. So February 1st, 2021 to February 28th, 2021, and run that report. So here is our report, and this will give us all the detail we'll have. And it'll give us the date, it'll give us the type of transaction, the number, the posting, the name, the memo, and then the account and the split account, the other account involved in the transaction. Then if we scroll over, I'm scrolling to the right, then it'll give us the amount. So what we want to do is compare this stuff out. We want to compare basically the amounts over here. It could be a little out of order because of dates. It's first in order by date, but then by something else after date. So if it's a little out of order, that's okay. As long as it's in the same month, then your month should be good. If something is not there, then you can troubleshoot by going back up here and changing the date. So if you change the date to before this date and after, then you can go through and say, okay, is there anything, for example, that is input as of after February, in March, or sometime after March? Well, if there is, then it's probably the case that it should be in February because we haven't input anything after February. If there's anything prior to that that should be there that is in a prior date, possibly in the current date of when you're working this problem, then it's probably the fact that the system just picked that date because it's the current date and we're working a practice problem that is of this date, and you can go in there and just change the date. You can actually click on it and change it. So if that were the case, you could just click on any one of these transactions find the source document, and then change the date. In a real life problem, very careful. You want to be very careful to change dates that are in prior periods because you'll mess up the prior period. But in a practice problem, that's going to be kind of an issue, and it's a common issue because, of course, we are working in a future date, and the system's always going to be want to be working in a current date. So we're going to close this back out. So I'll scroll through here, and you can just take a look at the numbers and just tick and tie these out if you're working through the problem to your numbers. Run this report and see if you can just click this off here and tick it off to your side. And if there's anything on this report that is not on your report, then you want to consider if it's a date problem, and then we can try to add it. If there's anything on your report that's not on this report, then the question is, should it be there? And maybe it belongs to the prior month that we worked in January, and check the January from the prior month. So these are, we should be able to go through here and just tick and tie off each of these amounts from this statement to your statement, and it should look exactly the same. Again, the ordering could be different, but the amounts should be the same as we go through here. So you want to just check these off for the entire month of February. And you could, once, if there's any differences, you can look at these splits and whatnot as well. And if you check all those off and there's nothing here that's not on your statement, or nothing on your statement that's not on here, and your beginning numbers are right, meaning you are correct as of the end of January, then your balance sheet and income statement should be correct. I'm going to scroll back over and do the same thing for the dates and the transaction type. So you can kind of check these two off and see if they tie out as well. So here's our dates and transaction types. You just want to check these two things off, and if the number's all tied off, but you think that there's a transaction type difference, then you want to go through these items and just make sure that the transaction type is the same. And if there's any differences, you can go through any of these and just check on it. Go in there and see if you can make any adjustments to them. So those are going to be those items. I'm going to scroll back up, and then we are going to export this to Excel. So scrolling back up, we're going to select the export item and export to Excel. I'm going to enable the editing, and here is our report. Now note, this report you might want to do some formatting to. If I click on the page layout, the second square, you'll note that the layouts, it doesn't print on one page for the landscape, and we would really rather it do. So I'm going to go back to the normal, and then it gives us these little lines that'll show us where it's going to print at. So I'm just going to go through our order of operations to kind of fix this. Typically you want to go to the page layout, and you want to change the orientation so we're in the page layout tab, and then page setup group, select the orientation and change it from portrait to landscape. That's the first thing you can do. Now the next thing we can do is try to delete some columns. It makes it a little bit difficult because they merged these cells. So I'm actually not going to do that. What I'm going to do is kind of force it to work by adjusting the printing options, which is the last thing you want to do to make this work, because it will adjust the kind of like the font size and everything. So we would rather fix it to fit on one page wide by adjusting the size of the font manually, and or the column size, or deleting columns. But we're going to go ahead and then do the last resort thing, which is go to the File tab, and we're going to go to the Print options, and obviously if you're just going to give this file to somebody, it's not a big deal. But if you're going to print the file, then it's a problem. So I've changed the image so you can see the drop down a bit better. So if you select this drop down here, the no scaling, then you're going to say fit sheet to one page. You don't really want that one. If you select that one, notice what it'll do is it'll fit to one page, but it'll also fit one page long. And if you have a very long document, then it's going to be way too small. So it's safer to go to fit to all columns to one page. And what that'll do is make sure it's fit one page wide, but it can still be more than one page long. In this case, it's the same because just of the dimensions of this report. But if it was a really long report, we could still have a couple pages long. That's fine. What we don't want to have is that it's printed on 2 pages wide. Now we're just going to say that that's going to be the formatting we want. We're going to go ahead and save this by going to the File tab once again and Save As. We're going to browse to the location we want to put this. We're going to put it into our same Excel docs folder here. Here it is, Get Great Guitars, and there's the name of the report. Again, we might want to change it to the dates, change the dates and save it as a date format. But we're going to keep it as is and save that report.